Hey guys, today we're going to cover two different strategies because I found that when you look at something like a Tesla that has rocketed so much, and then you look back and you say, what should I have done and what should I do now? I feel like those are two different strategies. The best time in hindsight to trade something like a Tesla that's now rocketed up so much would have been somewhere lower, maybe below the 200-day moving average. If you look back at any time these growth companies have been below the 200-day moving average, in hindsight, those are great times to place your longs and then take them off later in the future. For the last 2 years, we've had two great entries when Tesla gets below the 200-day moving average, and two times it's done fantastic. And maybe when it's below the 200 average, you might do a call option. So let's show you a call option. We'll use the 200 call. So Tesla. Okay, it was easier for me to just pull this image from my Discord. If you look just before the election, when we were unsure that Trump was getting in, the stock fell to 220. At that time, these calls, the 200 strike calls for January, they were trading below 40, which is, they're not cheap. They were $4,000, but now they're $23,000. So 4,000 became 23,000. I think they're even higher now because the stock has kept going. But the point is, buying below the 200-day moving average is the safest, has the most reward potential for the risk. But then what do you do the rest of the time? So what I've been playing with is, hey, the market is drifting, trending up. There has to be a trade that you can do in small size that you can do on those boring days when the market is just drifting. And why not automate it? So that's something I've been working on. So far, I've been playing with, this is the best strategy I have so far. So this is a 0 DTE strategy, automated open, automated close. So as you can see, this is a 30 delta spread, short the 30 delta leg, 10 delta is the buy leg, and these are put spreads on the S&P 500, the SPY ETF. And this is the results of a back testing. And it turns out that it has a 95.7% win rate, and $10,000. It only used like $2,000, but $10,000 returned at 9,800. So it almost doubled the account. Realistically, you could put less money, but I decided not to go that way. But is this a viable strategy when you don't have any stocks you like below the 200-day moving average? I think it might be. So this strategy, the way it's set up here, uses 10 contracts. It takes $43 times 10, so $400 on average per day, and it closes it at 25% profit. So on average, that's resulting $53 a day. So on $10,000, that's not too bad. And like I said, you could end up using less money. But this is automated. This is a bot doing the trading for you. And it seems to put on the trade at 9:35 every day. And it filters out downward trending markets. So if the market is starting to dip, it won't trade on those days. At least it tries not to. But these other days where when it's just trending, every single one of those green days would have been a good candidate for this bot to trade. So not too bad. In the beginning of the year, it was trending more, and it's as the market's gotten choppier, as you can see, it's had a little more trouble. But still, I'm impressed by the fact that it's a 95.7% win rate, and it looks like it only has a losing streak of -1. So I believe that's maybe back-to-back losers of maybe 2 days. I think that's what that means. But not too bad. Only 12. I let these expire all the way with no stop, and only 12 went all the way, expiring as losers. So not too bad. Let me know if you would do this type of strategy, or if you would do a different strategy. Let me know what strategy you would do differently, and I'm using Options Alpha. This is their 30-day trial. Let me know if you're running an auto trade strategy or a bot strategy on options or stocks, and I will backtest some more. But again, this is a strategy that I would be doing while I'm waiting for these other stocks to come and play. Like let's say Palantir. If it fell below the 200-day moving average, great, I can trade that. This over a year and a half did more than 10x. And if you used options, you would have gotten more than 10x. I think I did the math, and $33,000 a year and a half ago would turn into $1 million after this move. So obviously $33,000 into $1 million is a far better move than trading the other options. The options bot, you're not going to put as much money as you might do an investment like this. You might buy more Palantir stock comfortably because you're able to hold it for a longer period, but you don't always get those opportunities. That's why I'm thinking that a bot like this may have its place, just to work some money while you're waiting. Keep busy, and this obviously performed well. And it's really for those days that there's not a lot of good trades, when it's just drifting up. When the market's going down, I find it a lot easier to sell put spreads, buy call spreads. But when the market's drifting is when I find the least amount of good opportunities. Let me know your thoughts, and we will go from there. Cheers.